market headlines. To understand the reasons for the day's movers and shakers. And get your portfolio ready for tomorrow. Beaming live from the CNBC-TV18 Motilal Oswal studio.
Most of the markets in Asia are trading higher, barring the Taiwanese index, which is down 1%.
The level of tariff increases announced so far is significantly larger than anticipated, and the same is likely to be true of the economic effects.
The support for the Nifty, which comes in at the 40-hourly exponential average, 23,030 is that number.
We are close to the max overweight we have been on India. It's our preferred country so far.
We are hoping in the next few months, things would settle down and the clients will come back and restart the discretionary spend.
Now there is an official confirmation from IDFC First Bank. So two large investors are putting money into IDFC First Bank, close to 7,500 crores.
Nifty 50, 23,390. We're down about 1/3%.
Whether it be industrial, some parts of consumer discretionary, parts of real estate, etc., are the ones which we can probably go to at this stage.
When you get that kind of capital, then we are at total peace of mind. I can focus on the work. I can focus on building a good bank.
Today, markets just seem to be consolidating, moving sideways.
From a regulator's perspective, high standards of corporate governance and listed entities are essential.
We are heading towards new records on the Nifty Bank, but can't count out the Nifty either.
Okay, it is boom time for markets, especially banks. It's a super screen as we go into this 3-day weekend. Markets looking super strong, 400 points on the Nifty. In a strange way, similar to what we saw yesterday. Yesterday the market did nothing for the first many hours, and then slightly before 2 o'clock took off. Today, of course, it started much earlier, but is it as broad-based as sort of wide participation as we would like? Probably not, but you can't take away from the fact that although it's led by banks, there is enough which is happening. This is Closing Bell. We are coming to you from the CNBC-TV18 Motilal Oswal studios. I'm Prashant. With me, my colleagues Surabhi and Reema here. Nigel is joining us from the newsroom floor. Guys, hi, good afternoon.
Hi, Can I just say happy Friday?
Happy Thursday, actually. Thursdays turned out to be happier than Friday, one could say. But guys, 3 days can be so powerful when markets have momentum, either on the way up or the way down. Just 3 trading sessions. 4.5% on the Nifty, 6.5% on the Bank Nifty.
Well, that's right. And the Nifty Bank is going to be the first one to hit those fresh all-time highs. So a few points away from there. Yeah. Great going from the Nifty Bank. That's been the one that's done the heavy lifting. Very, bulls will feel good going into this long weekend. They would have been dreading it a few sessions ago. But the markets have bounced back and bounced back in style. The breadth of the market continues to be good for the last 4 trading sessions. The last tick has been at the high point of the day. The breadth has been good. I don't think the bulls could have asked for more.
By the way, you meant Thursday? You meant Friday?
No, I meant Friday because today is the last day of the trading week, right?
Thursday is new Friday. All right. No, I think, it's looking good. And banks, of course, as Nigel said, just what I think we're at the high point. We were about 30-40 points away from a new all-time high for the Nifty Bank. So yesterday, that headline was doing the rounds, although it was 1 day late, that India is the first big major market to go back to the pre-tariff levels. And I think we can today, maybe if we do it, we'll have one of the big indices here out of a major market to go back to an all-time high in double quick time. Of course, Nifty Bank did not fall as much as Nifty, so it had that much lesser distance to cover on the way up. But it is what it is. And look at HDFC Bank, ICICI, Axis. So really a lot of participation. Just look at the Nifty and what is influencing this move. It's again all financials. And that's why what I was saying, that it's not as broad-based as you would like. It's largely led by, although there is a Reliance, etc., which is participating, but it's the bulk of it is all coming in from what's happening with financials. Even names like Shriram Finance, for example, Bajaj Finserv, Bajaj Finance, those names are also doing very well. Reema.
So it's banks, NBFCs, Reliance, and IT too has trimmed all its losses. At the session lows, the Nifty IT index was down 2.5%, and now it's pretty much flattened out. So now we've advanced for the 4th day in a row, and this week, the Nifty, the mid-cap index up 4.5%, the banking index is up 6.5%, And names like ICICI Bank, Bharti, HDFC are all hitting fresh 52-week highs. This is a truncated week. Next week, we'll have the monthly expiry. And then on Saturday, we've actually got the two very important banking numbers, HDFC Bank and ICICI Bank, and that will influence Monday.
No, absolutely. And I mean, I take the point on IT, obviously. And the thing is, you anyway expect weak numbers, but if the delivery is even weaker than expectations, then you have casualties. And Wipro is a classic example of that. But otherwise, while financials are leading, the rest of the market, I mean, if you look at the Nifty, this is classic FPI buying, in progress. Because apart from the financials, and they obviously, form the lion's shares, a lot of other stocks in the Nifty are also looking much, much better now. Reliance would be one. Names like Titan, names like even Trent, I mean, some of these consumer names, they're seeing plenty of traction this afternoon. And then, you have a little bit of pharma here and there, some auto here and there as well. So overall, things are looking good. Mid-caps are lagging, but Nigel, I guess when the large-cap screen is looking so dominating, eventually mid-caps tend to catch up.
Well, that's right, but the point of Reliance Industries, that one has got above the 20 DMA. So that's another important technical mark out there. And HDFC Bank has made a fresh 52-week high. It went around 1880 in December, and from there it saw a sharp pullback. But today, that big boy as well has returned back to form. So when you have both those two that are firing all cylinders, it definitely helps the Nifty as well as the Nifty Bank to move up. Mitesh Thakkar is with us. Mitesh, good afternoon. Getting into this long weekend, first of all, congrats on getting this call right. For the last few trading sessions, you have been saying it on the morning call itself, that you look to buy into any kind of dip, you'll maintain that long bias, and you believe the markets are good for more. So great going on that call. The question is, what do you do right now? Go and enjoy the long weekend, book some profits, or do you think you want to carry some positions?
Definitely. So I think, the structure had been positive and therefore trading long was, kind of an easy decision. My sense is that it's kind of even met and exceeded the targets of 23,800, which I was looking at. And this could mean that this move could, possibly head towards the 200-day average, which is 24,050. And in a good case scenario, even 24,180, 200 zone. So still maintaining positive bias. In fact, I have a buy on State Bank of India. Buy here with the stop just below levels of 780. A target of around 835 can be looked at. And Aurobindo Pharma is the other one, which I like. Buy here with the stop at about 1145 for targets of 1210.
Look at the moves we've seen in the last 3 days. So IndusInd Bank in 3 days is up 15.5%. Axis Bank is up over 12%. Shriram Finance has advanced nearly 9%. Adani Ports has rallied 8.5%. And Bharti Airtel has ticked up more than 7%. Mitesh, anything in these frontline, other than State Bank of India, any other banking, NBFC stock? NBFCs are also on fire. We spoke about Shriram Finance, but you look at Muthoot Finance and the others, all are doing well. Any other trades?
Oh, I think you're right. Banking and financial names are the one which are leading the rally. I do like Shriram Finance a lot. In fact, that is one of the stock which I thought I could give a trading call upon. It's heading towards 720, which is the earlier closing high which the stock did. I think that was way back in September of 24. And once it clears 720, I think it's even good for 780 to 800 zones. So very, very positive pattern. Chola Finance is the other one, which I've been tracking and looks like could do very well. Chola has met the first targets of around 1630, which is where the stock had peaked out again, in September of 24. But maybe by this will decline. Once it clears 1630, we'll definitely see higher levels. And on declines, I think anything close to about 1560, 1550 is a good entry point.
Got that. Infosys has recovered fully, right?
Yeah, fully recovered. Infi and TCS are now in the green. It's only a Wipro and a little bit HCL Tech, which is something.
You want to just quickly tell us the, Mitesh, stay with us. Just a quick Infi preview. What are we expecting? If we have the graphics, we can just quickly pull those up.
Well, on the top line, we're expecting a revenue decline of more than 1%. 1.1% is the CNBC-TV18 poll. This would compare with TCS and Wipro, which has fallen by 8.8%. But remember, both Infi and Wipro disappointed the street on the top line. So these estimates that we're putting out were pretty much set towards the end of March or early April, and the commentary appears to be a little worse. There has been an impact in Q4, so don't be surprised if generally IT disappoints even in Q4. So on the top line, our poll is at minus 1.1%, but I think the street is braced for a little bit of a miss. For margins for Infosys will also come under pressure, and that's because of wage hikes. For Infosys, wage hikes are staggered over the January and the April quarter, so there will be some impact on the wage hikes. But the key is going to be the FY26 guidance. Estimates were for 2 to 4%. Some like JP Morgan, I think Ambit, Kotak, some of them were at 1 to 4%. So at the lower end, it was about 1%. Will the company guide? That's question number one. And two, if they do guide, what will the number be?
Absolutely. And I think we'll have to see this closely. Mitesh, how's Infi set up? I mean, the index, the IT index itself is down some 25% this year. But things can obviously get worse depending on which way things are headed in commentary, etc. But technically, price-wise, what's the view here?
So, Prashant, few things. I think one, the IT index, as you rightly said, has been down significantly, and roughly about 33% from the highs, and now looking extremely oversold. So, I think what I'm waiting for is some kind of reversal signal. I think I mentioned OFS today in the morning. I had a trading call over there, and that's trading about 1% higher. I think now is the time when IT stocks might give you a sign of reversal. Wait it out. I think see if there's some good confirmation coming on the charts. Then you might want to buy into Tech Mahindra, TCS, Infosys, etc. Only for trading bounce, but I think you're extremely oversold. So I would not be shorting them right now. Waiting for an hourly chart or 2 hourly chart to give me a buy signal and then trade over there.
A lot of price damage perhaps has already happened in IT stocks. And the bad news is known. Infi and Wipro, both of them have already sounded very cautious in terms of the commentary. So incrementally, is it going to get worse in terms of commentary and numbers? That remains to be seen. The street seems to believe that incrementally, perhaps, we may not get worse news. And valuations now are coming to long-term averages or pre-COVID levels. For TCS, in fact, valuation is below the pre-COVID level. For Infosys, it's at the pre-COVID level. Wipro is very close. Wipro pre-COVID was at 15-16 times. So Wipro is still trading slightly above the pre-COVID levels. But for large caps, Infi and TCS, valuations are back to pre-COVID level. The only problem is growth. Look at the growth estimates. Jefferies is saying TCS will grow at 2% from FY25 to FY27, and Wipro will grow only 0.7% revenue CAGR. For the last 2 years, Wipro has given you degrowth. If it degrows in the current year, that's FY26, it will be the third consecutive year of negative annual growth for Wipro. So yes, valuations are also down, but there is no growth. But on the flip side, you can always argue that these are, cash-rich companies, dividend is coming, buybacks are happening. Wipro, for instance, their operating cash flow in FY25, that's last year, was about $2 billion. So, that cushions the downside.
Absolutely. Another one, Mitesh, which is buzzing, and let me just quickly go across to Hormuz, who's standing by, right? KFintech is the company which is in focus today. They've announced that it will going to pick up a 51% stake in Ascent Fund Services. Hormuz is here with what the street is making of this deal. It's come off a little bit from the highs. Hormuz, take it away.
Divergent opinions coming in on this acquisition. There are bull case scenarios and bear case scenarios as well. We'll start off with Jefferies, where they are the ones that the bulls, their buy recommendation there, 1310 with a price target. They're saying that this deal will help their international expansion for KFintech, and it is also complementing their product suites. The deal valuations are attractive, but they are cutting their FY26 earnings estimate because of a cash outgo, because of this acquisition, and of course the fact that the acquiring company, company that they are acquiring, their margins are at a lower level as well. The bear case comes from two of them. Citi has a sell rating, an 830 price target. They're saying that they are enthused by KFin's incremental customer acquisition capabilities in the global markets, but the execution risks and talent retention will be the key monitorables going forward, and they have raised their target multiples to 36 times from 32 times to capture any potential synergy benefits from this deal. And lastly, Kotak too has a sell rating on KFin, a 1,000 rupee price target. Now, they're saying that this acquisition will allow stronger market presence in newer geographies for KFin, but the financial implications of the deal are less pertinent. Valuations are a constraint, and they would await a better entry point.
All right, Hormuz, thank you very much for that. We'll get the opinion on KFintech from Mitesh and others in just a bit from now, but let's now cut across to my colleague Shireen Bhan, who's in conversation with IndiGo CEO Peter Elbers. Shireen, over to you.
On a good Indian tourism industry has been on a good run, and the hope is that things will continue. The momentum, of course, has been built up, and as we look at the new financial year, which has started, we are already seeing signs of the domestic move strengthening further. Of course, international at this point in time a bit uncertain given the escalation of the trade war. Back home, the big story, of course, emerging is IndiGo. It has become the world's most valuable airline, with its market cap crossing $23 billion. To talk to us about IndiGo's aspiration of being India's first global airline is Peter Elbers. Peter, always a pleasure. Many thanks for joining us here on CNBC-TV18. It's great to have you back on the program. Let's start with India, and let's start with domestic travel at this point in time, still looking very, very strong. As we start this new financial year, I know you can't give us specific numbers because you are in your silent period, but what's the mood in the market at this point in time?
Yeah, thank you. Thanks for having me here today, and it's a pleasure to speak to you always. If we look about the development of the domestic market and we take the most recent published official numbers, and as you said, I cannot give any speculation about today's numbers since we're in that silent period. But for both the month of January and February, the DGCA data was released, and both of them actually had an 11% increase, which basically are very, very good numbers. So there was some slowdown at the beginning of 24, around the election time. There was some slowing down, but actually ever since, we can see a very solid demand and a very positive development of that demand.
Well, speaking of demand and speaking of positive developments, I'm just taking a look at the numbers for your summer schedule, 14,158 weekly flights. That's much higher than the 13,050 flights last summer.
Yeah, we keep adding and we keep growing, and for the financial year which is past, we announced a early double-digit growth. We have actually the same outlook for the next year. And for an airline of our size, today we operate a little short of 2,300 flights a day. If you think about that, take a step back, we're welcoming every 3 days 1 million customers. By the time this interview is over, we have welcomed another 7,000. So it just shows that the numbers are there and the numbers continue to grow. So our ambition really is to double towards the end of the decade. That's a long-term projection. But in the meantime, we keep adding these numbers.
Well, speaking of adding numbers, it's what, a plane a week at this point in time? That's the run rate that you're working with?
Yeah, that is still the runway. I mean, the last year, 24, we received 58 aircraft. And, I think it gives a lot of pride to everyone at IndiGo and probably India also. The single largest taker of planes on the world, not the region, but the world, was IndiGo. So here we are, an 18-year young Indian airline taking the highest number of plane deliveries from anywhere in the world, 58 planes. That means more than one a week we had last year. And our ambition is actually to continue that growth path well into the next decade.
Well, I know it doesn't directly impact IndiGo, but let me ask you about what you make of China's decision not to order Boeing jets any longer. We don't know whether that will eventually happen or not, but how do you see that development?
That entire discussion today around the tariffs and that US China development, especially when it comes to aircraft, I think the world today is in need of having multiple suppliers when it comes to aircraft, and clearly Boeing and Airbus being the two largest. So I would assume that a resolution is found one way or the other at that point in time.
Well, speaking of finding a resolution for the capacity constraints that you're faced with, you are continuing to lease aircrafts. You've just leased 4 more from Norse. What's the plan on that front, especially as you have these big global ambitions?
Well, the Indian market is growing at a great rate. Despite our large order book, still some of the global supply chain challenges are really affecting us when it comes to delivering the capacity. So ever since this started to occur 3 years ago, we have taken a whole range of mitigating measures in terms of extending leases, getting temporary planes, doing some damp leases. All these things have really helped us to live up to our capacity guidance. Now we have ordered the wide bodies. So we have 27. The first wide bodies are coming in, and actually we don't want to wait for that. So as a bridging until that time, we started to damp lease 787s from Norse.
So does this give me a sense that the decision to not wait for the wide bodies and actually go in for leases is a way for you to accelerate and speed up your international expansion plans?
It surely is. The market is there. A lot of Indian travelers today don't have the opportunity to travel either direct or travel on an Indian operator. I think by us providing that capacity, there's an opportunity for people to start flying direct, or to, we have announced Manchester is going to be the first direct connection from Delhi into Manchester. That's great, both for the people in Delhi and actually India, and the people in Manchester. Amsterdam is the other destination we'll be starting adding, and there's more to come. And
so what more can we expect, at least as far as this financial year is concerned? How many more destinations do you intend to add?
Well, we will have the number of Norse planes going up from 1 to 4 in this year. We will start with the XLR. That's a very important development for IndiGo. That will allow us to further stretch the range. We haven't disclosed yet which destination, which number, but let me share the following number with you to get a bit of an indication. When I joined IndiGo 3 years back, we had like 25-ish international destinations. Today we're 40. And Fujairah has been announced as number 41. So that is in a time span of less than 3 years.
You've doubled.
We've pretty much doubled.
Yeah.
And of course there's an end to, you cannot endlessly double it. But India was so largely underserved, and the demand for the Indian consumers, ranging it from Karabi in Thailand to the Middle East to Europe, is just massive.
So coming back to specifics now, in terms of your international ambitions, because when we last spoke, you said you want to make IndiGo India's global airline. So in the near term, what does that mean in terms of the number of people that you will fly on your international operations? What does that also mean in terms of your margins and change of margin profile?
The IndiGo International Network, Shireen, is started some years back, very traditional, if you wish, between India and the Gulf and the Middle East countries. We've been slowly expanding that. So in 23, we started flights into Central Asia. We started flights into Nairobi. We have moved, and I had a meeting earlier this week with the CEO of Changi Airport. We moved from moving into Singapore from 3 Indian cities to 9 today. But that's still within that 5 to 6 hour radius. I think the next step for IndiGo is to make sure that even Europe and further parts of Asia would be accessible directly, operated by IndiGo. And if India is going to be the 3rd largest economy in the world by 27, the country needs and deserves actually an airline of the size and scale and potential of the nation.
So what is the indication and the timeline that you're working with in terms of the wide-body deliveries because of the backlog that we're dealing with?
Just some numbers here. Today, we have ordered 30 wide bodies. The delivery starts from 27. We don't want to wait for that. That's why we have the temporary bridging. We used to have around 25% of our available seat kilometers international. This year we're reaching 30, and we have put a projection out there to move that percentage up to 40%. So the foundation of who we are as IndiGo will remain strongly and deeply rooted in India. We operate a little short of 500 routes in India itself, direct city pairs. That's the foundation of who we are, and that continue to be. Out of that 500, pretty much half of them are unique. So that provides suddenly air connectivity, connecting the nation, giving wings to the nation. But on top of that, that international dimension is being built. And 40% is the number which we put out there. 40%
is the number. We're still waiting for your results to be announced, which will be sometime in May, so you can't give us specifics. But the street is working with estimates as far as what profitability for you could look like. It's been 9 quarters on the trot, with the exception of 1 quarter of positive bottom line for you. At this point in time, given where crude prices are and have come up very, very sharply, as well as demand, you're looking at significant tailwinds, I would imagine, aren't you?
Well, I think in another configuration, one would call that a leading question. As you rightfully pointed out, we're in a silent period, so I cannot give any indication.
Don't talk to me about numbers.
Looking back to what we have done, and I'm very proud what the IndiGo teams really have achieved. In the middle of 22, we were exiting from COVID, and I remember joining at that point in time. We made a sort of small profit, but was very meaningful because it was actually, the dark days of COVID were behind us, and we started to emerge from that. And ever since, we have been building not only our network, our customer proposition, our profiling, but actually creating the margins to start investing in the future of the company. If you want to become a global airline, we should have a service, IT, digital tools, all centered around that.
So what does that mean in terms of investments over the next few years, whether it's on IT, whether, I mean, we know what it is going to cost you as far as the aircraft is concerned, but, you know, just building out the ecosystem to be able to deliver to the promise that you've just articulated, what will it mean in terms of investments?
Well, there's going to be serious investments, and obviously fleet is the largest part of it. Next to fleet, it's people. You know, this is the training center, and really very important part of IndiGo is the people we have. It's also very much all our investments in digital. We start to invest heavily in AI. You know, we were a bit behind that, but if India is home, we should invest to that, and we should actually lead that. So we have our own sort of AI center now building and working on.
Is there a number, you know, that you can share in terms of what you've invested so far on AI?
I
or
don't
what
have
your
a number
intention?
in number of crores, but it's multiple crores. Obviously, we're investing in that. And last but not least, it's not only our own investment, but also partnerships. So as recent as last week, we signed up a big partnership with Accor. So it's the first of its kind in India. And basically what we will be having now, that all our blue chip members can start using their points in staying in Accor hotels. And Accor members can using their points in flying IndiGo. Accor is present in all our 40 international destinations. So remind, what does it mean for an Indian consumer? You fly a lot domestic, you use your points.
All right, we'll accumulate those points as the CEO of IndiGo says, but great conversation there. We'll get you more as we go along. But we have to take a quick commercial break here. Sanjay Parekh of Soham Asset Managers on the other side. Welcome back. Markets are looking very, very solid. Sanjay Parekh is founder and CIO at Soham Asset Managers. Sanjay, good to have you back in the program. Thank you for joining us. You know, suddenly it looks just like that. It looks different, right? That's the beauty of markets. And Bank Nifty is almost at an all-time high. Although mid caps and small caps, etc., are kind of taking a backseat today. Those indices are up only 0.5%. Frontline indices like the Nifty Bank, etc., about 2% gains. Nifty is up 1.5%. I was looking through what you own, and we've discussed many of these names. Some are recent additions as well. Not that many, but a few are, right? Which had a bit of a swoon, and they are coming back very, very strongly. Pondy Oxides is the name that I recall. But what have you been doing, Sanjay? Give us a flavor before we get into individual names.
So it's been a roller coaster ride, and at least at the lower end, and we sent you a note as well that we realized that, at 22,000 that it's overdone. But, in such a volatile and chaotic world, it's tough to call a bottom. But all our balance sheets really were in good shape. RBI was very supportive. We saw rate cuts. And certainly, I think what's coming out is that on a relative basis, we are much better placed in a global chaotic environment. And hopefully, it's tough to call. You all covered it so well that the China issue over a period of time should get resolved, because that will certainly will not be good for the world as well. So I think the recent discussions that we see that both of them slowly and steadily, it's still too far, they're too far away, but it should gradually resolve, and then back to sanity. At what levels they'll settle is yet to confirm. But I think markets are taking a hope that maybe things will get resolved soon. India, we were better placed, and I think this move, global FIIs, they started buying, possibly taking a cue that we are coming out to be quite a winner in this. Why we would be vulnerable on imports and dumping possibly from China, and export vulnerability also goes up, but we are definitely better placed in certain segment of EMS, or we see it as it comes in more sectors as well. And that is, I think, where this rally started, because we know that our earnings this quarter is going to be weak. But despite that, the only major reason I see is we are getting better placed within the world, and valuations in larger cap had got comfortable. That is at least my feel of what is happening in the market.
Hi Sanjay, good afternoon, good to see you in. Sanjay, most of exposures to large caps, if indeed the worst is behind, India is better placed. Do you think you look at at least keeping large caps as the highest exposure, but maybe incremental money going to mid and small caps?
Yeah, so always, last time also we discussed, we were never averse to mid and small cap. We only said that the margin of safety has to be higher. That is all. So we said that we will actually get opportunities in this carnage. And certainly, we added in a small way, but we did add one of them in small cap. So overall, we are still open to it. It's just that the environment in India is still tough in terms of earnings, and we need to have a higher margin of safety. So whenever there are opportunities, we are very, very open. We are overweight on large caps. The mandate is to have at least 70% large cap. We are today 77% large cap. But we are certainly open to looking at mid and small cap with a higher margin of safety.
Sanjay, hi, afternoon. Is IT approaching value zone to your mind for you to increase your exposure, large cap or mid cap?
We've been now 3 years underweight, 6.5%. Of course, we got hit when the IT did very well in the last few months, barring last month, again, it gave in. So, now the question what you're saying is absolutely apt, that we are also seeing that what is the implied growth and the current price. And now the implied growth is coming to be reasonable, at more like 5, 6, 7% long-term growth rate. But what is happening is the near-term pain also is there, and still we see the analyst estimates, they're still at 5, 6, and some of them are now moved down to 3, 4%. But in a low growth environment, the return ratios are phenomenal, but growth is missing. So, how bad they can derate is even we are trying to question. In the last cycle, they did get further derated quite down. So we just watching it, remaining underweight. But at a point, you're right, there will be value, and one can act contra, and we are positively looking at it to reduce our underweight, but not now.
Okay. Sanjay, hi. Good afternoon. I was looking at your portfolio. I think you're going to have a fabulous weekend, right? Because for viewers, banks are 31% of the portfolio. Diversified financials are another 7.8% of the portfolio. And the party here has really begun, Sanjay, hasn't it? I mean, and you've got everything out there. Axis Bank, HDFC, ICICI, even IndusInd, SBI, you've got Bajaj Finance, Shriram Finance. So I think it's a big party weekend for Soham India.
Yeah, I mean, this week has been good. We did take our set of pain when they were underperforming. But banking, we had our conviction, and that's why we have an overall financial overweight. And we had this view of domestic overweight. And honestly, we didn't know it's going to be chaotic world. But all throughout, it was a domestic overweight, global underweight, which helped us. So be it transmission play, a telecom play, a tower, Indus Tower, or a power or utilities, or grassing through cement. All of it, or ports also, if the trade is going to increase from India, hopefully they'll also do better. So
no, Sanjay, my question, allow me to just quickly dive a little deeper into financials because you have such significant exposure. Now, what is the story from here on? And you have everything, so you're absolutely fine. But if we try and narrow this down a little more, where will the earnings kicker acceleration, whether it's top line, whether it's margin, where will the kicker be felt the maximum? So where is the risk reward looking the best in financials?
The near term. The near term, as we know, the asset side repricing happens faster. The liability takes time. You will see actually pain on earnings in NI growth and NIMs. And with these two rate cuts, the repricing of asset side will certainly have a problem. But the other side is that when your repo rate cuts happens, the risk-free rate actually slowly edges down, and your price to book logically has to go up. So I mean, it's very logical, right? Interest rates going softer, your valuation has to go up. But for near term, yes, there will be challenge on growth. But structurally, I think, we have to see through this 1 or 2 quarters of pain on NII. And if you think the longer term, they're very, very well placed. It was always well placed, but it took some time before now it's starting. And the valuation, you see SBI even today is at 1.2 times, Axis is 1.4 times. You go up, SBI, even HDFC Bank after this move is 2.3, 2.4 times. ICICI Bank is 2.5. So when you see the Nifty, and then you see a clean book on price earning or price to book, they're still very reasonable. So we are positive, but having said that, near term, I think we will see some earnings growth challenge on NII.
All right, Sanjay, great conversation. Next one, we will get into some individual names here, but good run and a good showing. Thank you very much for joining us here on CNBC TV18. We'll take a quick commercial break here. As always, we get you a quick check on what's happening in dealing rooms. And dealing rooms, I'm sure, are buzzing. Deal chatter, of course, has been very, very high, as Nimesh has been telling us. So we'll do that in a bit from now, and some trading ideas as well coming up.
Welcome back. Markets holding strong. Good time to get to D-Street chatter. Nimesh joins us to tell us exactly that. Nimesh, what are you picking up? The FIs have turned buyers for the last couple of trading sessions. And today the screen is looking good. But what are the flows looking like?
Nigel, today I think it's a bit of a surprise to me as well. I mean, it was not anticipated that we'll see this kind of a move. The Nifty is up almost 2%. The bank Nifty is up almost 2.5%. At least for private banks, the feedback is there has been flows for the last couple of days and delivery-based buying. So that's showing up in the numbers as well, right? If you dissect the FI data for the last few days, majority of the buying is coming to the private bank names, especially HDFC Bank, ICICI Bank, and Kotak. And also, clearly that is one space which is doing good, and there is buying as well. Having said that, the screen is looking good today, but it's not like the broader markets have done well.
Yes.
Today, a lot of people are surprised as to what my portfolio has not done well, so to speak, where the Nifty is up 2%. So that's a kind of a day. It's largely driven by large cap stocks. So maybe you'll see a large FI number driven by flows into the bank stocks. Technically now, this is an important level to watch. 23,800 is just about those levels. If we sustain and close about those levels, and if global market support us, you'll see further short-coming rally in the days to come. But clearly, this is one big resistance level to watch out. But needs to see, we have a long truncated weekend, so how global markets behave. But clearly, the buying seems to be largely biased towards the financial names.
Well, that's right. Nimesh, the last time around, we did a U-turn from around these levels, 23,850 or thereabouts. And it seems that we have things going for us. The FIs are buying. They're doing the reverse arbitrage in the futures market. And also, you have fair bit of liquidity in the domestic market itself. What about individual stocks? What are you picking up?
So, a lot of stocks are buzzing in the broader market names today. And the first stock on my list today is Restaurant Branch Asia, RBA. That's been buzzing on large volumes, up 7% last when I checked. Again, the buzz is that maybe a large family office has been accumulating the stock in the last couple of days. So that's the reason why RBI has been buzzing off late. Second, couple of stocks where there is delivery-based buying today. Marico and Indus Tower both stands out in terms of aggressive buying from larger FIs. So expect high delivery volumes on both those names today. The third stock is MQR Pharma. Again, up 6% volumes have picked up as well. Even in MQR Pharma, the buzz is that a couple of large HNI investors have been aggressively buying in the last couple of days, and hence that big move. And the last name is IRB Infra. In a market where there is so much of buzz in the broader market stocks, IRB is pretty much flat. And the reason is, for the last couple of days, there is very strong delivery-based selling happening at a leading FI. So it looks like some large FIs are looking to exit into IRB Infra at higher levels.
Thank you very much for that. HDFC AMC Q4 numbers up for you on your screen. Top line up 30%. Bottom line is up nearly 18%. The stock is higher by 1.7%. Mitesh is now back with us for a few last calls before the long weekend. Mitesh, would you hazard a trade now? Can't hear you.
Is the audio clear now?
Yes, go ahead.
So logically, you're taking good profits, and you would want to carry much long positions. But pharma still looks like a safe space to me. So I have Sun Pharma and Torrent Pharma as a BTST call. Torrent Pharma BTST can be taken with a stop at 32.35 for targets of 32.80. And Sun Pharma is something which I would recommend taking a BTST position with a stop at 17.40 for targets of 17.70.
Okay, thank you very much for that. Enjoy the profits that you've made. Sudeep Bandopadhyay is now with us, Group Chairman of IndiTrade Capital Now. Sudeep, quick word on HDFC AMC. Is this a stock that you like, and how do the Q4 numbers look at initial glance?
All the AMC stocks from a long-term investment point of view, I think, financialization of saving is happening in India, and it's happening at a rapid pace. And this trend is expected to continue for a very, very long time forward. So as far as the AMCs are concerned, the well-performing AMCs with large AUM should definitely be looked at. HDFC AMC is, of course, a well-managed AMC with a track record of performance. The profitability also is good. So there is absolutely no problem for somebody to hold this for a long term, in their portfolio. If you are looking at short term, I think then you should stay away. But from a long term perspective, this is a good investment.
Okay, that's HDFC, AMC, got that point. The market's continuing to charge ahead, 23,845, that's where we are at. And by the way, Eternal, the erstwhile Zomato, is in lead position on the Nifty. Eternal's up about 4%. Bharti Airtel's having a stupendous run as well almost 4% up on Bharti. So, Sudeep, financials is a consensus trade. Everyone knows that, you have to buy the banks and the NBFCs. Beyond that, this move on Zomato that we're seeing today, this is pretty interesting. What do you think of the stock?
I do like Zomato. In fact, there is Swiggy, there is Zomato, but if somebody has to buy one stock in this space, I think Zomato is the place to be in. There are some short-term pain because the Blinkit is scaling up, and while they're scaling up, their profitability is under pressure. But if somebody is looking at a long-term perspective, I think both the businesses, which is the food delivery business as well as quick commerce, both have significant potential and scope for expansion. Also, the District app, which they acquired for events, has a significant potential of scaling up. I think they will definitely be giving Book My Show a run for their money. So that can become a big money spinner for them as well. So I do like Zomato from a long-term point of view. But if you have the money and the investment capacity to expand the basket, then I will definitely recommend looking at Policy Bazaar as well.
Sudeep, Sonata kind of scared the mid-cap IT stocks with a revenue warning. So after TCS and Wipro missed, then you had Sonata saying that one of their largest clients, the revenue that they were anticipating from them will be lower. Analysts are saying so it's going to be a tough quarter for Sonata Software in Q4. Considering the base, any miss, any hit on one client, any project which gets paused will hurt them. Are you worried about mid-cap IT and the kind of earnings we might see? And any particular thoughts on Sonata if you look at it?
Absolutely, I'm worried. In fact, look at Wipro. I think they also commented that some of the projects are getting stalled. And this is bound to happen in the scenario which is currently prevailing in US. I think the US corporation, the CEOs and the CFOs are not sure about the future. And when they have this kind of uncertainty, they will definitely like to hold back on spending, cut down spending wherever possible, press the pause button. Now this, from a Wipro point of view, I think still they can manage and move forward. And that's what pretty much we saw as far as their margins are concerned and other things are concerned. But from a smaller IT company, mid-cap IT company, these kind of challenges can pose a big threat. So I have been extremely cautious on IT, and I'm definitely more cautious on mid-cap IT compared to large-cap IT. There are so many of these companies, let's say Emphasis, they are dependent significantly on financial services. Now, if the US is getting into a recession kind of a scenario, the deal flow in US have slowed down significantly. Obviously, the financial services will also slow down. The new projects will not come. So you have to be very careful on mid-cap IT. And each of these companies needs to be examined individually. We need to, more than the Q4 numbers, we need to understand what they're talking about the future.
Okay, all right, got that. Sudeep, stay on. The weekend's going to be pretty busy when it comes to earnings because some of the biggest lenders are reporting numbers. HDFC Bank as well as ICICI Bank will be out with their Q4 performance over the next 2 days. We have Abhishek joining in with the key expectations. Abhishek.
Well, HDFC Bank has already given the pro forma business update, which shows that they had, on a sequential basis, one of the best deposit growth in last 4 quarters and one of the best loan growth that they had in last 5 quarters. So the key thing to watch will be the net interest margin, which is largely expected to remain stable or flat on a sequential basis. Last quarter, it was at 3.43%. Now, slippages can increase quarter on quarter. Analysts like Kotak Securities is estimating an annualized slippage ratio of 3.1% when compared to 1.4% in the previous quarter. Credit cost expected to improve on a sequential basis. Now watch out for the asset quality, which is expected to remain stable or improve. So analysts like DAM Capital estimate gross NPA ratio at 1.3% versus 1.42% in the previous quarter. Management commentary with respect to business growth will be seen closely. Our polls suggest NII growth of 5.8% of YOY and about 0.4% sequentially. We are working with a profit growth of 3.3% YOY and about 1.9% sequentially. We We also have ICICI Bank, which is going to report its Q4 FY25 numbers. The key thing to watch will be the business momentum. Now, Motilal Oswal estimates a deposit growth of 12.3% YOY and about 4.5% sequentially. They are expecting loan growth to be at 14.8% YOY and about 3.5% sequentially, which means that the credit to deposit ratio that can decline on a sequential basis, and hence net interest margin can come under pressure. So net interest margin is expected to decline YOY and quarter-on-quarter. Analysts like Kotak Securities is estimating net interest margin decline of 24 basis point YOY and about 10 basis points sequentially. Now, provisions could rise on a sequential basis. Again, Kotak Securities is estimating credit cost to increase by 20 basis point on a sequential basis. Slippages can also rise marginally on a sequential basis. Kotak Securities is estimating slippage ratio of 2% versus 1.9% in the previous quarter. Asset quality expected to improve on a sequential basis. Motilal Oswal estimates gross NPA ratio of 1.8% versus 2% in the previous quarter. Watch out for management commentary with respect to business momentum going ahead. Our poll suggests NI growth of 9.2% YOY and about 2.5% sequentially. We are working with a profit growth of 11.7% YOY and about 1.5% on a sequential basis. Back to you.
All right, Abhishek, thank you very much for that. So, busy weekend. HDFC Bank and ICICI both with numbers. HDFC Life will also be reporting earnings. So, let's quickly get a preview from Yash, who's joining in. Yash, tell us.
Well, HDFC Life Insurance to report its fourth quarter results today. And as far as the numbers are concerned, it's expected to be a strong performance when it comes to the top line or the premium collection which the company is expected to make, but margins are expected to remain subdued or muted. I'll come to the specific numbers. Total annualized premium equivalent or total APE, that is expected to see a growth of about 13%. The number that we're looking at is 5,343 crore rupees. Value of new business of VNB, again similar growth expected there, about 13.5%. The number that we're looking at here is about 1,400 crore rupees. As I said, margins are expected to remain muted. So just about 9 basis points improvement is expected in the margins. The number that we're looking at here is 26.19% as compared to 26.1% on a year-on-year basis. Now, three key takeaways expectation in terms of the qualitative side of the numbers. The company, that is HDFC Life, is expected to be best placed in the sector when it comes to APE as well as VNB performance in the fourth quarter. VNB margins, as I said, could remain muted, and that is largely because of two reasons. One is higher share of ULIP, and the second one, a stronger growth which could come in as far as the group segment is concerned. The third one, if the numbers do come through as per what the street is anticipating, then the stock has a limited upside potential. That's because the stock has already run up in the last 3 months. It's up about 12% in the last 3 months, trading at 2.3 times FY26 price to embedded value.
Yash, thank you very much for that. Get into a break, the last one before we wrap up this week. And as we do that, good news for all our viewers, because India's business news leader is now just a click away. Introducing the CNBC-TV18 all-new app, you can get instant access to our breaking news, in-depth articles, financial world updates at your fingertips. So download the CNBC-TV18 app now from the Apple Store or the Google Play Store, or you could just scan that QR code on your screen.
The iconic line from Top Gun, was there ever a moment in that phase where you were creating this movie-going experience where your father maybe told you that, son, you're writing checks that your body can't cash?
He made me cost conscious. He made sure that I didn't spend that kind of capex, that there'll be no returns.
A lot of the scale has been driven by way of M&A and acquisitions, and of course Inox was the big one.
Yeah.
What would you say have been the non-negotiable?
I think non-negotiable right from the beginning was to stick to the fundamentals. And I was really privileged to have somebody like Renuka and Vishal Mahadevia, who's Warburg Pincus,
yeah.
and mentors like Sunil and Rajiv Singh and so many people fundamentals, unit level economics. So when I was doing organic growth as well, location has to be right, the rent has to be right, developer has to be good, development has to be good. That was organic. Inorganic also, am I acquiring something which is going to be value accretive or value destructive? Is it an ego vanity acquisition, or is it something that is missing in the current portfolio and is going to add value?
Welcome back. Just 4 minutes to go before the day and the week winds up. We've still got Sudeep joining in. Sudeep, a lot of people will be very happy to finally see Reliance move higher. I mean, it's been a very long, patient wait for Reliance investors. What do you see ahead? I mean, levels of around 1270 on the stock today.
Well, I've been a bull on Reliance for quite some time. I think, there's a major value unlocking opportunity sitting there. Even performance-wise, they deserve a much better valuation. It was subdued and, there were a lot of selling in this counter because of multiple reasons. But as things stand, somebody taking a 6 months to 1 year view, I think 1500 can be the target as far as Reliance is concerned. Value unlocking of the telecom business is bound to happen. It's a matter of time when. Somewhere retail also will get unlocked. These two are big potential. Apart from that, the traditional oil to gas business also has started performing. There are multiple pulls and pressures on account of the global oil prices and the petchem prices. But in spite of that, I think we are expecting good set of numbers overall from Reliance in Q4 as well.
I mean, that's and absolutely, some visuals coming in. I think these are the shots coming in from BKC, where BSE is celebrating 150 years, and it's a historic milestone. Absolutely. I mean, of course, for the exchange, but for markets overall as well. The finance minister, by the way, is in the audience, and I think we should be able to cut across to the FM when she starts speaking as well. So, I mean, some of the stuff which is coming through right now. 3 minutes to go for close. Maybe I can just quickly start wrapping up things before anything. By the way, interesting moves, and I was just looking at stocks which have moved this week. And of course, we were talking about all the big ones. But there was SW Solar, a completely bombed out name, which came up about 16% this week. Actually, if you can have these intradays up for the week, it'll give you a quick sense. So SW Solar, 16% move this week. GMDC with about a 16% move this week. Intellect about 15%. Delivery 14%. There was Home First 13, NTPC Green 13. A name like MCure was up 19%. And of course, I mean, there was Fact, which was up about 22%. I mean, but that's lesser traded and not that tracked as well. So these are some of the big movers in the broader space. And of course, I mean, as far as the larger space is concerned, it is the IndiSInd and the Axis and the ICICI, Shriram Finance, Geo Finance, etc., which really did very, very well. And for the week, by the way, there was only one loser on the Nifty, Wipro, which is down about 1.5%. I think bulk of the damage, of course, coming in today. So that is short and sweet 3-day week that we've had so far. Not very much by way of recovery from the day's low. The absolute low, of course, was made early on in the morning. Did you track this one at all? Have you looked at it? SW Solar, Sudeep?
Not really. In fact, this is some of these stocks we don't track, so I won't be able to comment on this. But overall, I think there are a lot of interesting things happening on the solar power and the green energy segment. And things can be looked at from a long-term perspective. Leave aside what US is doing, but as far as India is concerned, there is still significant opportunity and potential for solar energy. Overall, the value chain, whether you are a battery manufacturer, whether you are a contractor, whether you are an energy producer, I think the upside is significant over the next few years.
I think in the last 10 months, stock lost went from 800 to 200. And it's a Reliance company, by the way. It's now about back to about 290. So swift recovery from the lows, but of course, I mean, the damage has been quite a bit. Sudeep, thank you very much for joining us. That's the close which is coming through. Nifty about 1.7% higher, and a phenomenal day, really, led, of course, by banks.
Well, Bharti Airtel also catches your attention. 3.25% higher for the day. In the last 1 year, Bharti Airtel is up 54%, and in the last 3 years, it's up 150%. So it's really been a defensive stock in the face of all the volatility, and stock 150% in the last 3 years. And today, Bernstein raised the target price further to 2020 as they anticipate another round of tariff hikes in November and December. But the gainers on the large cap screen, ICICI Bank, Bajaj Finserv, Kotak Mahindra Bank, State Bank of India, SBI Life. So the gainers list is full of banks, financials like insurance, AMCs across the board. Other than that, Reliance Industries was a big mover. Reliance Industries today with its 2.6% up move crossed the 50 and the 100-day moving average. So that's a big gainer. On the way down, you had Wipro, 4% lower, top loser. Tech Mahindra ended in the red. Hero MotoCorp, where the companies announced that for 3 days, 17 to 19, there will be a production shutdown to align with the supply chain. So Hero MotoCorp ended down 0.25%. BPCL, Hindalco, JSW Steel, Coal India, some of the other large caps ending in the red.
Absolutely. Quite a day for mid caps today. However, just to point out some movers and shakers, you've still got names like KFin, 5.5% higher, Cello World, 5% higher, Vijaya Diagnostics, about 5%. And some of the small finance banks have done really well. Jana Small Finance Bank, Equita Small Finance Bank, and Ujjivan Small Finance Bank. All of these stocks up almost 6 to 7%. Overall, a solid week for the Indian equity market. Well, that's a wrap, but stay tuned because we have Editors Roundtable coming up next.